Hello and good day. Daily analysis of the gold symbol on January 28th. As predicted, after a short-term downward correction, the price filled the gap and then continued its upward trend. By carefully examining the Fibonacci ratio, we see that the first potential price target could be the 5,332 level. And, with increasing bullish momentum in the market, the 50% level of the next Fibonacci level, namely 5,440 to 5,400, can be considered price movement targets. And, finally, 5,544 can be chosen as the next target. By examining the RSI index, we see that the price is in a high potential range, indicating the continuation of the upward trend in the market, where the RSI index with 3 periods of 7, 14, and 42 is in the overbought zone. The price trend could have only a relatively brief and short-term downward correction. And then target the FVG range at the 5,158 level in the near future. In this range, we can look for a trading strategy for a buy position in the market, and after that, it can continue its upward trend. If it's accompanied by a bullish displacement, it can continue its upward trend from the price of 5,287 to target the Fibonacci ratio prices. By examining the 1-hour time frame of the gold symbol, we see the price movement where the 4-hour FVG range overlaps with the 1-hour FVG range, which indicates a high potential range where a consolidation zone is situated at the bottom and is considered to be a highly significant and important support area. This level often attracts attention due to its role in preventing further declines. Currently, the price is forming a pin bar candle, which could move down from this section to collect sell-side liquidity. It could potentially collect liquidity from the swing low at the 5,157 level. And finally, in this section, we can carefully look for a suitable buy position in the market. Which are the probable scenarios for the Ryan Soldier strategies or strategy number 2, where the price can potentially move downwards and collect liquidity, and at the 50% level and within the fair value gap range, have an upward retracement and close within the range. From this section, we can enter a buy position, place the stop loss behind the swing, targeting a risk to reward of 1-to-1, 1-to-2, or the swing high at the 5,312 level. Also, if the price is accompanied by bearish momentum and closes below the 5,102 level, it could continue its downward trend towards sell-side liquidity, targeting the 4,990 level, and after that we can look for a buy position in the market. However, a price increase in the market is considered to be considerably more likely at this point in time, and it might only have a short-term downward correction. Also, if it does not have sufficient momentum to reach the 5,157 level range, it could be targeted from the 5,202 level and then continue its upward trend in the market. By carefully examining the 15-minute time frame specifically, we see that as predicted, the price collected buy-side liquidity at the 5,097 level, entered a corrective phase to fill the gap in this section, and then entered a bullish phase, which is currently performing an accumulation move within the Asia session range, and is now forming a manipulation move in the London session. In this session, some possible scenarios are that the price could potentially move downward, and if it happens to re-enter the London session range, it could then have renewed bullish momentum in the New York session and possibly continue its overall upward trend. But if it closes within the Asia session range during the London session, or if it targets lower price levels, it could potentially collect sell-side liquidity from this particular part, where we can carefully identify a suitable trading strategy and use this opportunity to enter a trade. By examining the DXY index, we can see the downward price momentum, which, with increasing bearish momentum, has targeted the 95.55 level, and by checking the RSI index, the DXY index has entered a high potential oversold range, and we can identify a positive divergence here. In situations where the price might only have a short-term upward correction, which means a brief and temporary increase after a decline, it can then enter a consolidation range. The consolidation range is a period when the price moves sideways within a narrow band rather than continuing to rise or fall sharply. In this range, the price could be rejected at the upper boundary, meaning attempts to move higher are met with selling pressure, and as a result, the price may continue its downward trend. In this short-term bullish correction, the price of gold could also have a short-term bearish correction. And with the continued decline of the dollar index, the price of gold can also continue its upward trend. Good luck and be profitable.